welcome to another episode of the Canopy Practice Success Podcast. I am Casey Brothers, your host. I'm here today with Jasen Stine. Hi, Jasen.
Hi, Casey.
How are you today?
I'm great. It's a beautiful day in Washington State today.
I do love the Pacific Northwest.
Mm-hmm.
Jasen, give us a little introduction of yourself.
Sure, yeah. So Jasen Stine, I've been in the tax and accounting profession for over 25 years, largely working with a big company you probably have all heard of named Intuit. I was their education, external facing, industry education leader for probably about the last 10 years I was there. Left Intuit about a year ago and became an independent consultant. So now I work with firms who are interested in I consult them on a number of different things, but largely people that are interested in moving their firms to advisory services, which is pretty much a fancy word for getting your clients on subscription. I also had my own firm for about 12 years. I ran it I was a strategic partner. I had an operating partner that largely ran it. We sold that a couple of years ago for roughly 2x revenues, and that was because we had moved our firm to advisory and subscription services. People tell me that's really good because most firms can't sell at all, much less for 2x revenues. Usually it's about 1x revenues if there's no subscriptions.
Yeah,
so that's me in a nutshell.
That is a really good multiplier, but can't sell? I feel like PEs, like private equity and VCs, are gobbling up firms.
They're coming in, yeah. But I think they're finding that it's not as good of an investment as they thought because they can't get their money back fast enough.
Something dry up and just ignore it entirely, as opposed to still purchasing it and rebooting it.
I mean, venture capital definitely come in. I talked to a couple of people who are more. I don't deal a lot. More the big firms is where you see that. Yeah. Okay. And I've talked to a couple people that do consulting work for those firms. I don't consult really big firms like that, so I only know so much about VC. But from what I've heard, they definitely were, and they're trying to move because there's a whole problem around like the partnership model in these firms and how it's hindering their ability to make the changes that are needed to be competitive in today's market. But I've heard that the VCs are like that may fizzle out. It may not, but it may fizzle out because they're not getting their money back fast enough because these firms are not moving in the direction they need to.
Okay, so back up just a little bit. Traditionally, an accountant's career path involves some sort of exit. I guess if we're thinking like the partner level, right? Mm-hmm. Not everybody makes partner, I guess, but those who get to that point get to an exit. It hasn't always been private equity and venture capital, right?
No.
Okay,
that's really new.
Okay. And here you're saying that they're even still starting to waver maybe on their commitment to this idea of an investment. So what is that and maybe other things meaning for an exit plan?
Right.
Yeah.
Yeah, I mean that's a good question, and it's there's a lot to that because, one, you're not going to see VC. The majority of firms that you see out there, are, medium-sized firms. They're maybe, half a dozen to a dozen employees. They got a few hundred clients, and they're doing great.
Yeah.
And then you can, in the bigger firms, you've got the bigger issues. Everybody's having a talent problem. So because people don't want to come into the industry, and by the way, not everybody, you mentioned not everybody makes partner. Most people don't want to get to partner at this point, because what that looks like is long hours for many years, a lot of responsibility.
Okay. And what that looks like, or what it's looked like?
Well, what it's looked like, but also when you've got this business model where we're focused on compliance work, we're still billing by the hour and still tracking timesheets.
Yes.
That's prohibitive to moving to an advisory type of model because it's a direct conflict. If you save time by streamlining and using technology to do that, then you're not making more money, right? So it's direct conflict. And so these firms could be making a lot more money, but then you've got, the older generation that's got the processes that they've had, and they're happy with it, and the business is thriving. And by the way, they're on the brink of retirement, so it's like, I'm not going to change everything just right before I retire, especially in the large firms where when they leave, they're just leaving the firm, and it's up to the firm to figure things out from there. With these medium and smaller firms, you got to really think about succession planning, because
Yeah.
what are you going to do? Are you going to just let your firm die on the vine? Are you going to work till it's the end? Are you going to leave it to your kids? Are you going to sell it? And so those are things that those firms are probably thinking about, and I don't know, if they know what they need to do.
Yeah, 100%. I mean, how many accountants really still need to consider themselves entrepreneurs, depending on, their level of ownership and what the firm is and their contribution to the firm, I guess. But someone who's a leader, CEO, founder, partner, um, have all of the typical issues that people going into general entrepreneurship do. And that's
Yep.
this lack of maybe understanding of how to optimize the firm as a business. And just to what you were saying. Okay, so we've got the talent chasm that I like to call this huge gap between the need and the supply. Um, but then you've got all of these. I saw recently that 75% of, oh my goodness, of
75%.
CPAs in general
Yeah, our baby boomer
are baby
generation.
boomers.
Yeah, that's scary.
Uh, yeah, and not just baby boomers, but I maybe even on the higher end. Like I'm seeing people as partner at an age that I'm like, don't you want to be retired? I don't want to be. I would want to be retired. I want to go sit on a beach and read a book. And there's, we're all very different in terms of like our passion and love of work, and I do find a lot of accountants just absolutely love what they do. So I
Yeah.
could get why that's also a reason why we're seeing an older retirement age in this generation. But then you touch on the point of changing and leaving the firm. What are some of the things? Actually, pause. I had a question I wanted to ask because we were talking about advisory and getting over that. Can anyone jump into advisory?
Yeah, yeah, definitely.
Okay.
It's a bit of a change for, I call it, turning chess players into cheerleaders. When
Mm,
when you're, and if you're going to probably have listeners that they've been running their firm the same way for a lot of
yeah.
years,
Yeah.
and it's been very focused on compliance work, pumping out tax returns, doing the bookkeeping, doing the
Yeah.
reports, and it's not a huge stretch once you're there, and you're doing advisory services, and you've got your clients on maintenance plans, subscription services, you're doing tax strategies, and helping them, navigate those things, and saving them quite a bit of money. You could deploy tax plans and save clients, 20,
Yeah.
30,000 or more a year. For the business clients, of course, mostly. When you look back, it's like, oh wow, I could have been doing this the whole time. But making the shift to get there is challenging, mostly because people are just afraid of the unknown,
Yes.
and that's normal. That's there's
Yeah.
lots of programs out there that can help people, really really push them through. And I do that with people too. If they just need somebody to just be there to as a coach and a guide, and move them along. That's a
Yeah.
lot of what people need.
Yeah. And I guess the reason I asked it, can anyone make this transition to advisors, because of that sentiment that you just ended on, is I feel like just with anybody really, any adults, there's always imposter syndrome, right? Am I capable enough? Do I have enough knowledge? Um, there are certain things that I've seen as I've talked to people, as I've gotten to know accounting firms, that I do feel like will set you up better for that sort of a transition. But even without those things, I think anybody could, as long as you made the decision and you committed, you could get into advisory tomorrow.
Yeah, for the most part, it's just I think it takes people a couple of years if you got an
Yeah, to fine
established.
tune it, and yeah,
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 yeah, getting over that first hump of getting your first client on subscription services. A lot
yeah,
of people, a lot of firms that are committed to doing this, moving to this space. And by the way, that doesn't mean the compliance work goes away, but you
right.
streamline that stuff and get it so just as efficient as possible, and you use technology largely to do that. Um, and then you get your first subscription client under your belt, um, and then you kind of keep working. It takes a year or two to get
Yeah,
there. Now, brand new firms have an advantage because they don't have a legacy business that they have to move to
yeah.
this. They could just start off this way, and then, oh yeah, by the way, we'll do the taxes and the bookkeeping or whatever else, but it's all wrapped up as part of one big package.
Yeah, that you do make an interesting point there. Brand new firm can start with the pricing model, the packaged approach, right? All of the logistics and operations are going to be easier.
Hmm.
But what I think might be easier for an established firm, just so that anybody listening can see, like, okay, there is a path for me, no matter what type of firm I am. Um, when you've been in business, you know who you like to work with and who you don't like
Hmm.
to work with. Whether or not you have the gumption to say, client, I'm just not a good fit for you, or you're not a good fit for me. And that can take some courage, right? And courage to have the conversation, but also courage in yourself and in your firm to be like, I can make it without them. I think those firms too are well positioned just because they can, if they take the time to slow down, reflect, they can identify who it is that they like to work with. And then hopefully that transition into implementing all of those operations that come with a subscription-based accounting firm, you're dealing with people that you like to work with and therefore hopefully like to work with you as well, and have a relationship there, and you can loop them in, I guess, in a way that you might not be able to loop in all of those clients if you keep all of them during that transition.
Casey, you're absolutely hitting the nail on the head. And that's actually where I tell people to start is ideal client.
Yeah.
And those clients, I find that a lot of firms these days, firm owners, they're not so much, they're not as scared to fire clients
Okay.
these
It's been
days
talked
as
about
maybe
a lot
five,
for a
10 years
while
ago.
now. Yeah.
Yeah, it's getting better because they just have too much work
Yeah.
and not enough time, and they're making perfectly good money. But the loss of revenue can be scary for some firms still. But identifying your ideal client and figuring out the industries that you like to work in the best too.
Yeah.
You want to figure out your niches. Generalist firms are have a harder time moving to advisory than specialist firms.
Yeah.
And not one industry, like pick a few. There's oftentimes industries that are kind of like retail and restaurants are often the similar types of industries that you can specialize in. I know firms that like to specialize in real estate and
Yeah.
law firms and doctors' offices, and lots of choices out there. And don't just pick one because then you make yourself vulnerable. But definitely get in your head, this is the perfect and you probably have a few of them. They're your top 20% of your clients already, and they're happy to pay. They don't complain. They're probably like wanting more from the firm in terms of advice,
Yeah.
but they don't realize, or they don't know to ask for it, or they don't know that that's a possibility. And so as an accounting practice, you've got to position yourself to those people and say, hey, we're going to move you into this new model because you are the right fit for this, and here's how this is going to work going forward. And you tell them what
Yes.
they're going to get from you in terms of value. And then when you spell all that out and you say, we're still going to do your taxes, we're still going to do all the services we're doing, but we're going to meet once a month, and we're going to start setting goals and looking at your budget and looking at more of your business, and I'm going to become more of a coach for you uh, than just a passive paper pusher. And obviously not those words exactly, but they're gonna light up. Those clients that are those ideal clients are gonna light up. They're gonna want those services, and they're going, okay, well, so what does this look like now in terms of payment? And you go, all right, well, instead of having one big bill at the end of the year, we're gonna put you on a monthly subscription. And here's 3 packages that I put together. One's a bare minimum, one's a massive amount of whatever. Like if you had a perfect world in mind, these are all, and then down the middle is probably the more reasonable, like, all right, we're going to do these things and meet once a month, and then most of them pick that middle package. But you'd actually be surprised at how many of them pick the larger package. So be careful with that too. Don't.
If you don't mind, I might offer some. So at a previous job, I did some really intensive market research with a research expert to help the company I was working for revamp their pricing and packaging.
Mm-hmm.
And there are some things I learned from that I think would be really helpful in this process as people start to think about packages and what would be valuable, how do I structure these. One of the things I did with research is I took, and I don't think you need to do this as an accounting firm, but I think you can innately discern this concept that I'm about to describe as you look at the things that you offer. But we took the list of main capabilities within our product and presented it to these survey respondents in bite-sized pieces, and like 15 at a time. And it was random. And it'd say, hey, order these from most impactful to least impactful. And then they'd do that a few times. And over the course of answering that question, all of the capabilities will have popped up a few times, right? The point being that it then enabled me to know what were the most impactful, most desired features. I was then able to then say, hey, okay, these relate this way. I'm going to package it this way. And what you do is you're able to strategically put things that you're offering in that next package to pull people up and to pull
Mm-hmm.
them up even more to that last package, right? As opposed to just kind of trying to throw spaghetti at the wall and say, I think this is what people would like. You can kind of start with that approach of like examining your services. Now, you've all listeners, I'm assuming, have been doing this for some time, and when you're in a room with a client and they have that light bulb above their head, or you know their financials and you know where you typically save people money. And so just as you're making those packages, think of the strategies you can employ to draw them where you want them to be, I guess, is what I'm trying to get at.
Yeah. I think also, for firms that are doing tax returns, that's a relatively easy place to start, because if you go, the first thing that you do in the tax space is you go get the technical knowledge. So you learn about the tax strategy, and there's tons of places where you can go get that information for free. You don't have to sit there and read through IRS pubs. And go get some education on the tax strategies, like Augusta rule and hiring your kids, and there's a few that there's like 100 or so out there, and then you get state specific strategies too. That's a whole nother world. But even just at the federal level, finding out those strategies and where the right fits are for it, and then you're already doing the tax return, so you just go in and look and see who qualifies for these deductions, and then you put together a plan, and then you say, hey, look, I've identified 3 major strategies that's going to save you about $20,000 a year going forward, right?
Pay me.
Here's my fee for helping you implement these strategies. And I'm telling you, people, and your fee's going to be like 10% of that, something like that. So you identify $20,000 worth of strategy. You should be asking for $5,000 to $10,000 in helping implement that strategy, because, like I said, people forget this a lot. When you implement that strategy, now it's saving you year over year every year. So it's not just 20 grand in 1 year; it's 100 grand over the however much that goes on.
I was going to say,
and that's a good way to dip your toe in the space.
Yeah. Okay.
Yeah, the math is not obvious.
No,
I'm just spitballing numbers off the top of my head.
no, I got you. I got you. But I said that because you point out that, again, it's a little bit of a long game, not necessarily, but also like reminding your clients about that long-term impact.
Yeah.
And the thing is, like, accountants do, to your point, okay, yeah, maybe brush up on some of these strategies, but you also, especially if you're already a firm that is a niche firm dealing with a certain type of industry or even a certain type of client, who knows what it is, right? You have data on however many clients you have in that industry. So you
Yeah.
now know that industry, or you now know what it's people who are landlords of 3 to 10 properties, right?
Hmm.
And you can see trends, or you can find ways to, use the data in a way that is appropriate to help you see those trends, to then say, hey, you benchmark lower than average for people of this type. Let's
Yep.
get you up, like, that's a huge opportunity.
And a lot of the times the software will has tools to help you identify that
Mm.
stuff. Like if you're using QuickBooks, a lot of people are, and I'm not plugging QuickBooks obviously, but I've lived in that world for a long time, and there were features in there that would tell you, like this client's spending more in this space than the average or less on that, so that's part of the role that technology can play, is in enabling and surfacing those data points. But like especially if you're doing the books, that's you've got all their data, you know exactly where they are, and you've got enough experience on your own that you don't even really need those tools. You can look at the numbers, and you've got a pretty good idea.
Yeah.
um,
Yeah.
I love that you brought the landlord thing into, like, as in that you did it in the context of real estate, but I also was thinking about that back when we were talking about ideal client,
Mm.
because I have rental properties, and having the pricing and everything that you've set up, um, it's very similar to being a landlord. Like when you're renting properties, if you've got your rent too low, you're going to attract clients that are budget clients, and they're not going to always take care of your property the best. They're not going to be the best tenants, and it's just the same thing in this industry, right? If your rent is priced higher, you're going to attract higher income, higher quality, tenants. Obviously, not so high that you're out of range of the market, but that's a big deal. And a lot of people make that mistake when they become landlords, is they think they're charging too much rent. They try to go cheap, and that's not always going to get you the best.
Yeah, pricing is a signal, that's for
Hmm.
sure. Okay, so back to exiting and stuff like that, because we went into advisory in terms of, like, us being an expert, but we touched a little bit on just this trend of people, a lot of CPAs being on the brink of retirement. um and I don't know that, if their partner, if they've got their own firm, that they're gonna jump on the conversation we just had, right, about jumping into advisory. But there are a lot of them.
Hmm.
Um, can you talk a little bit about maybe what they should be considering, or maybe even, depend where you want to take this conversation, given the conversation we've already had, what people working with them?
And that's exactly where my mind was going.
Okay.
So, because I think the folks that are on the brink of retirement, they're probably not even listening to this podcast, right? They're
Fair.
they're doing their thing, and
Yeah.
that's fine. That's fine, But there's nothing I could say to them, that they would find helpful. You know,
Or
they
that would change their mind overnight, that they haven't heard
exactly,
before.
exactly. They're not struggling. They're just doing their thing, and then they're gonna retire, and they're gonna decide how they want to leave things. But everybody else who's left behind, though, and I find this a lot with people who have, like, their kids are going to take over the firm, and the kids are grown adults, and they know what's up, and they know that they want to do these things. But the owner, the usually it's a dad, just isn't interested in changing processes and implementing new technology and really rethinking those things in big ways. One, because of everything we've talked about, but also because, I'm a little older and I'm a little more set in my ways. I can't imagine what I'll be like when I'm, 60, 70. I'll be a lot more set in my ways. And it's just, it's just a human factor.
Yeah.
And so the kids get frustrated because they're trying to take over. And so my advice always to them is just be patient. It'll get there, and start lining up. Keep educating yourself on, getting the right technology in place. Still try to have those conversations with, dad or the owner. It's not always, it's not always just that situation. Sometimes, firms will have people that they're cultivating to ultimately take over the firm.
Yeah. Yeah,
But
don't keep on educating yourself. Make sure to
right.
stay in the know, definitely. Yeah.
And don't give up. And have your, start lining up your ducks so that when you get the green light to go ahead and take over, you can start implementing those changes as quickly as possible. And it starts with the technology and the streamlining workflows and processes. If you've got file cabinets around the office with papers piled on top of them, you're behind the 8 ball. So because you're never going to get to the next step if you're so buried in manual processes. And this is also really important for firms that are going to sell, because nobody is going to buy a firm where they have to physically go to your location and go through manual files, like paper file. That is not attractive to anyone who's interested in purchasing a firm. They're purchasing your client list, and they're purchasing not your workflows, but the clients that are wanting a firm that sits in today's technology. Because, people who are coming into adulthood now don't know life without a smartphone. They don't even know what that life is.
Well, yeah. So Amazon changed the game in so many ways. But people don't think of how Amazon changed the game in regards to maybe how they, the market that they're playing in. And I say that because what Amazon or apps or all sorts of things have done is changed the consumer's expectations.
Right.
And though DoorDash is not an accounting firm's competitor, the experience, maybe. The experience that their customer gets from Amazon 2-day delivery, from DoorDash, from any myriad of things, right? Of this really simple interface and interaction, the fast turnaround, the clear communication of what's needed from them, all of that, they're going to start applying to and expecting from the firm. Right. And whether you're delivering it or not, you may not even know that they're making these comparisons.
Right.
They are.
Yes, they
are. They are.
And it's not just the clients, it's the employees too. It's probably the employees especially. They don't want to work in an antiquated environment. They want to be leveraging the latest technology because they know it's better. That's why it exists.
Yes, 100%. Well, thanks again, Jason. It was a pleasure talking to you.
Oh, it was my honor to be here. Thank you for inviting me on the show.
Anytime.